We'll just give people 5 more seconds to settle in, and then we will begin. All right, I think we're going to get started. Thank you everyone for being here. I know it's Friday afternoon, and usually if my friend asked me, hey Darius, what are you doing next Friday? Do you want to go hear 2 bankers, a lawyer, and an accountant talk about cross-border tax? I'd probably say, I don't know, it'd be a hard yes. I appreciate your time, and I know we're wrapping up for some of us a very big week of events. My name is Darius. I'm an investment advisor with RBC Dominion Securities, and we manage money for businesses, high net worth individuals, professionals, and we answer money-related questions. Now, those usually have to do with tax, the big T word, but in the last 6 months, T also stands for Trump and tariffs, and a lot of uncertainty. And I know uncertainty doesn't start with the letter T, but I couldn't find another word. It does end with T, so. I'm really excited to introduce 4 specialists today. They each specialize in a different area. So Christine in the startup fundraising and capital space, Namir in tax, specifically cross-border tax, Canada on the US side, Lena in law, and Hassan in psychology. And the idea is we'll ask each of them a couple of questions, and ideally by the end of the conversation, you'll have a basket or variety of advice to take home to your business, to your practice, to implement in your everyday life. Now, Christine, why don't you kick us off? You specialize in working with startups and a lot in the investor. Sorry, my chair is moving as I speak, so I'm trying to turn it at the same time. Christine, you're with RBCX. Can you share with us what type of clients you work with and what trends are you seeing firsthand with these businesses?
For sure. Thank you so much for that lovely introduction. So I guess a little bit of background about myself. Christine Ahn, I'm VP Banking with RBCX. We are a specialized team within RBC that focuses on providing the traditional banking services to growth stage tech and innovation companies, but also sort of the non-traditional, non-conventional financial services to our clients. And some of the other things that we do is we've got a portfolio of VCs and investors that we work quite closely with from within Canada as well as from US. And so we facilitate investments to our growth stage companies in Western Canada. So on that note, I guess I can say that I tend to have a pretty close pulse of that investment landscape that we're seeing today. So I'm happy to share some of my observations today. And I guess to answer your question, I'll start off by maybe talking about some of our higher level macro view of some of the industry trends and observations that we're seeing, and then we can kind of drill down from there to share what that might indicate for some of the companies that are here in the room. So I think the good thing is there is a pretty healthy level of sustained investor interest in the Canadian market from both within Canada as well as from the US or international countries. Based on the recent 2025 Q1 publishing by the Canadian Venture Capital and Private Equity Association, we saw that there was about $1.25 billion total investments in Canada deployed across 116 deals just in the last quarter alone. So, that's somewhat of a decline from the previous quarter, but still a pretty healthy level of investment activities that we are seeing in the market, which is a good sign, given all the talks around uncertainties, tax, tariffs, and all of that. So there is a pretty good level of confidence there. On that note, though, what was really interesting for me to note is that there is a bit of a shift in the sentiment on the investors' part, and where we're noting that is, 5 of the 5 mega deals reflected about 46% of the total investments that took place in Canada just in the last quarter. And so it's really interesting to note that, shift sort of away from some of the earlier stage companies, and by that I'm referring to companies that may be sort of in that pre-seed to seed stage, maybe in the Series A space as well, to a bit more of a focus on later growth to late stage companies. And so we are noting a pretty steep decline in the investment activities in the early stage, with more focus on, lesser deals, but larger transaction volumes, with the focus on, well-maintained, well-operated later stage companies in Canada. We're seeing a pretty similar trend in the investments coming from the US as well, in that there's lesser number of deals, but larger volumes, again, with the focus on some of the more established companies. And just kind of in the midst of all these conversations around uncertainties and tax and tariffs, I guess you can imagine, like, there's definitely certain types of businesses that are lesser impacted from these kind of economic landscape, and those are like software companies, info tech companies. And so these companies seem to be drawing continued attention from some of the investors, and we're seeing that reflected in the recent publishing by the CBCA as well. So that's something to sort of keep in mind. The other thing that was quite a bit of a change and shift in the overall environment and the landscape is that we're seeing a lesser of exit activities recently as well. So there actually wasn't any of IPOs in the last quarter, and there were 7 M&A activities, which is down by about 0.5% from the prior quarter as well. And part of the reason for that is because a lot of the companies are facing challenges with the valuation of the company in the midst of all these uncertainties. So that's one thing that kind of is impacting the overall sentiment. But having said that, not to sound overly depressing here for early stage companies, I think this really presents another set of opportunities for many companies. Like, I think it's a really good time to take a step back and think about what's a healthy balance between scalability and profitability. I think a lot of the companies, especially in the tech and innovation space, tend to sort of default to relying quite heavily on that external source of funding until they kind of find their space in the market, until they start to see the profitability. Whereas now we may be in a landscape where you could call it a pressure, but it's also an opportunity for a lot of our early stage companies to think about, like, what's my business and revenue model? Is this really sustainable? Because that's something that any company should be thinking about at some point. It's easy for a lot of companies to kind of rely on that external source of funding to really scale, but you got to think for yourself, like, at what cost am I achieving the scalability? And there comes a point where you need to really kind of look to assess if you're spending like millions in marketing, for example, and burning cash and achieving like 20-30% year-over-year top line revenue growth, is that sustainable in the long term, right? So those are some of the questions that you could be asking yourself to really kind of take some time to reassess your operational efficiencies, financial sustainability, and cash flow, most importantly, with sustainable growth in mind. There are some, other sources of funding that you could potentially rely on, such as like grants from the government, like shred tax credit is one thing that a lot of, the tech companies are very familiar with, but there's also other sources of, grants that could be focused on specific industries like import-export, for example, or clean tech that could be available to many of the early stage startups as well. There's, it's a good time to think about some of the debt strategy for scaling your growth. So there are programs that are available for small businesses and startups that have yet to achieve profitability based on, the business plan and projection. So these are some of the government-backed lending programs that could be available through your financial institutions. As well for companies that are kind of past Series A. It's always great to engage in an early dialogue with your bankers and relationship managers about what sort of specialized programs are also available to support extending that cash runway until you get to that next milestone. I think that's something that all companies should start to think about for themselves as we are starting to see longer private stage life cycle in a lot of the companies.
Thank you, Christine. And it sounds like we're working with a tough environment, but there's lots of ways to get money within your company, whether that's through investors or government funding. And dealing with investors is one thing, but businesses also have to deal with changing legislation, regulations, and the T words again, tax and tariffs. So I would like to introduce Namir. This is your specialty. Can you give us the T on tariffs?
Oh, I like that question. Well, first off, hi everyone. So my name is Namir Hallak. I oversee the U.S. cross-border business tax practice at Andersen. Andersen is a tax firm. Here in BC, as well as in Alberta, we have 55 professionals. Our specialization really is on cross-border businesses. So if you have operations or investments or people crossing that border, our job is to simplify for you, make it make sense, and hopefully demystify what it means to cross the border. I would say there's three major developments that Canadian startups that are doing business in the US need to be aware of. The first one, which is hot off the press, is 2 nights ago, legislation that passed through the House of Representatives in the US was passed, and it was called the, I have to keep a straight face while I'm saying this, the Big Beautiful Bill. It's actually not law yet. So it passed the House. The way Congress works in the US, it also needs to pass the Senate as well. But in that 600 plus page draft bill that's passed the House so far, there is a rule called Section 899. And I would say with Section 899, this is a warning shot for Canadians that are doing business in the US. And the reason for that, the objective of this Section 899 specifically is they're essentially trying to target countries that they feel are unfairly taxing American companies. And if you know Canada, Italy, the UK, we'll stick with Canada for now, they passed what's known as the Digital Services Tax last summer. And this is, the way Americans look at this is, well, this is unfairly targeting big tech companies. The Google, the Meta, any company that it meets that threshold. So this Section 899 might actually be triggered for Canadians as a result of that tax. So they'll look at it and say, well, you're kind of unfairly taxing American companies. So if you're a Canadian company in the US and you're in the SaaS business, you're in tech, or you have an IP-heavy business, so you're licensing things to the US, this is something that I would be looking out for. And the reason for that is if this does go through it goes through the Senate, it'll mean that you're going to be paying a lot more taxes. You'll also potentially be losing a lot of treaty benefits. And guys, this is a treaty that's been around. The US-Canada Treaty has been around since 1980. So we're upending a lot of protections that Canadian companies have had if this goes through the Senate. Now, the other one I would say, the other major development is there are a lot of US tax provisions that are set to expire in 2025. One of the examples, for example, is the 20% deduction available for pass-through entities. So if you have a partnership, if you have an LLC, if you have a sole proprietorship, this is set to expire at the end of 2025. There's also a provision that allows for immediate write-off of significant capital investments that you're going to have. This used to be 100%. It's dwindled down to 40%. It'll go down to 0% in 2027. So, right now we're in a bit of a limbo because we're waiting to see what happens with the Senate. Will they also pass this as is? Will a lot of these provisions stay intact? And then will this get passed as an actual bill? We'll see if this gets signed. And then, of course, the third one, which is the other T you mentioned, is tariffs. What we know is, there's been a lot of uncertainty here, which is probably the hardest part of how business owners are dealing with it. Where we've landed now is the US has imposed a 25% general tariff on all Canadian goods if you are not CUSMA compliant. CUSMA is the new word for the NAFTA agreement. 10% for energy. Now, Canada initially retaliated, and then they said, we're going to have our own tariffs, and then they've scaled those significantly back. I would say, what I would watch out for with tariffs is, even if you think you are CUSMA compliant, you really need to check your documentation. Make sure that you have the right classification. They're being a lot stricter in looking at the nuances of how you've classified it. I would also actually recommend, look at potential planning opportunities like tariff engineering, where you're looking at, how can I potentially price this in a way so that I can lower the tariffs? And there's even opportunities, for example, in the US, they have like a foreign trade zones where you can import the product and it won't actually be subject to tariffs until it leaves the foreign trade zone, which potentially could, lower your tariffs, or if you re-export that product to another market, then you won't have to pay tariffs at all. So I would say those are the three major developments to be looking out for.
Interesting, and I like how you share specific examples that businesses can implement. I actually want to jump back to you, Christine. So speaking of things that businesses can implement, what if they're pitching to a group of investors and the investor asks them, what does your range of outcomes look like if this tariff is implemented? Would you recommend they change or adjust their pitch in this uncertain environment, or what would you recommend they do?
That's a great question. I think it's very, very important to keep in mind of your audience when you're pitching. So it doesn't hurt to have sometimes several different versions of a pitch deck depending on who you're speaking with. One thing I would suggest is, if there is a potential risk that is inherent in your, just day-to-day operations, such as tariff or global economic tensions that we're, talking a lot about these days, don't ignore that in your conversations in the investor, because they're already thinking about it, right? So, I would suggest address it, but also talk about what are some of your strategies to pivot and mitigate those risks. And I would say that's more of a realistic pitch and a plan, and that will resonate well with the investors.
Nice. I think a few years ago in the investment space, the nice words to hear is we're going to make you a lot of money, and now the words we like to hear is we're going to mitigate a lot of risk. So the vocabulary has definitely changed. And back to you, Namir, what would you recommend to those that are considering operations cross-border?
I would say, the first thing is start with structure. Look at the structure that you're going to use to expand to the US. I would say one of the mistakes that I see often is you'll try to replicate or copy what a US founder is doing. So for example, you'll say, well, they have a Delaware LLC, I'm going to use Delaware LLC. That sounds great. And the problem with that is, and again, even if you're talking to a US tax advisor, they're looking at this purely from a US lens. So you really want to make sure that there's harmonization on both sides of the border for the structure you have. And you're considering things like, what is my exit strategy? And will Canada recognize the type of payments between both countries so that it's getting the most efficient way of pulling the cash out of the US back to my Canadian entity? Things like that. I mentioned LLC. There's also the US has a lot of hybrid fancy arrangements like an LLP and an LLLP. And from a US perspective, they see those as partnerships. Canada looks at that and says, this is quacking like a duck, it sounds like a duck, you're calling it a partnership, we're not calling it a partnership, we're going to look at it as a corporation. And that's really dangerous, because that could mean you're paying a lot of taxes. The other thing I would say is, be conscious of how you want to finance your expansion to the US. There's new rules in Canada that were implemented called the Eiffel Rules, no relation to Paris. The Eiffel Rules essentially are meant to look at whether you're able to deduct your interest expense. And essentially, Canada has belts and suspenders on. You've got to look at whether you are over-leveraged and whether you're making interest payments to other non-Canadian related entities. And the US has equivalent rules. So the short takeaway there that you need to know is, just because you're financing this to grow your business in the US, you don't want to be in a configuration where you're not able to deduct those interest payments in the US as well as in Canada. And if you're a finance-heavy or a leveraged business, I would say that's a key consideration to have. And I would just say, just generally, when you're moving money across the border, be conscious of how both countries are not only just funding the business, but how are they actually characterizing that type of payment. If you're calling it an interest payment or a royalty payment or a licensing payment, you want to make sure that there's, again, harmonization on both sides of the border, so you're doing it in a tax-efficient way and you're able to stay lean from a cash efficiency perspective.
Awesome, thank you so much. And I know my question was about those that are considering operations cross-border. Is there anything you would add for businesses that are already operating cross-border?
Yeah, I would say a couple of things. I would say the structure that you set up to launch your business will be very different than the structure you will use to scale your business. And part of that is a lot of the assumptions that we've had in terms of the way there's cross-border efficiency is being challenged. We've got this big, beautiful bill, which is upending a lot of assumptions we've had on how things are characterized on both sides of the border. I would also say revisit, if you have intercompany payments, revisit your transfer pricing strategy. That's really going to be important. And again, if you're shipping a physical product across the border, I would make sure your CUSMA documentation for that physical product is airtight. Make sure you've got the classification correct. And I would really consider how you're setting up any of these arrangements so it's efficient on both sides of the border.
Awesome, thank you so much. Now it sounds like, well, there's a lot we can control. We've got quite a list of things we can control. And speaking of things we can control, we've talked about dealing with investors and external stakeholders. I want to switch gears and talk about how to deal with people within your company as well. Now, Lena, this is your expertise. You have lots of experience advising business owners on the legal side with your employees, and I think that's especially important during times of economic uncertainty. Can you share a few examples of things that businesses can do to make sure they're covering their bases?
Yeah, I guess I'm going to start with asking a question from the audience. How many of you are owners, business owners? Okay, and how many of you employ more than one person? Okay, and how many of you have partners? Okay, and how many of you foresee hiring more people for your startup, hopefully? That should be all of you. Everybody should have some hope for the future. Okay, all right, so I'm going to give you guys some high-level advice regarding 4 things: hiring, firing, partnerships, and contracts, which you're going to deal with a lot. So once you start your startup, you're going to find yourself having to contract with a lot of people you didn't know before, a lot of work qualities that you can't assess because you're not an expert, a lot of people who are selling you amazing stories and telling you they're absolutely the best, and now you're gonna just make it and you're gonna just run and sign up and hope for the best. 90% of the time, regardless of whether you're a doctor, you're a lawyer, you're a startup, you're gonna lose money. You're gonna make a lot of mistakes, lots of mistakes. I have myself as a business owner, as a law firm owner, not a startup owner. So what do you do in those situations where your budget is limited, you're being presented with a contract with these service providers, and none of the contract or anything that it says makes any sense to you, and you just kind of skip over it and sign it and hand it over to them, and then issues can start. Put the contract to the side and just ask yourself, how do I want to be protected? So let's say, let's just use an example, like you want to use an SEO company, for example. So you want to say that I will pay a maximum of $1,000 per month. These are the things that you have promised to achieve for me. What happens if you don't achieve them for me? What would happen if I want to disengage from you? And what are the consequences of disengagement? And then instead of writing the contract, you write back to them and just ask the questions. They will answer those questions in simple terms. Once they email you back, if you say, I agree, you have a contract. You don't need to sign anything. You don't need to go through the fine print. You don't need to get a lawyer to review all this, fancy language. You have a contract. You have a question, which is an acceptance or a revision of your answer, and then there's an agreement. You have a contract. So don't get too scared when you get contracts. Just think about how you can protect yourself, and then you can also ask them, what are the clauses in this contract that protect you regarding the main items, for example. Like if you want to fire me, what do you need? How much do I need to pay, and so forth. So that's as far as those things go, so you can reduce your legal fees, especially in these uncertain times. Partnerships are absolutely the worst. The worst things that we deal with. They are worse than marriages. The breakdown of I'm actually a family lawyer and an employment lawyer, and I have partners, and I'm telling you, partnership is worse than getting fired, getting divorced, having your money taken by your spouse. It's just partnerships are, So first rule, just don't get into one, because trust me, you're gonna really save yourself a lot of headache. But some partnerships are necessary for growth, right? Like you can't make it on your own, especially when you get bigger. So partnerships are a fact of life, just like marriages and divorces are. Like you know the risks, but you still do it anyway. So if you're faced with a situation where you're really hoping for the best, but your chances of failure are more than 50%, such as when partnerships happen, what is the first thing you do? In case of a breakup, you want clarity. You don't want to get sued, just like you would in a marriage, right? Like you want to have a prenup, not just because you want to protect yourself, but because you want to have no uncertainty. If we get a divorce, here's how much I pay you, this is who keeps the house, and we just walk away. A lot of people think prenups are, I keep everything, you keep nothing. Prenups are, okay, that's a conversation for another day. ADHD kicking in. So what do you do for partnerships? Clarity. What happens if I want to exit this partnership, right? Most partnerships happen through a handshake. They happen through a drink at the bar, because this person was probably your friend or your colleague, you know them really well, so you have nothing on paper, and you start this process thinking that the trust that you have is going to help you. It's not going to help you, because you're going to have differences in opinion, and those differences in opinion can become very tense. And if those differences in opinions are attached to your core values, you're not going to give up your position. And when you don't give up your position, friction arises, and then there's a breakdown in partnership. So the very basics of partnership is, what is my share, what is your share, how do we cover the expenses, what happens if we want to depart, do I get a right to buy you out, do you get a right to buy me out, do we put the business on for sale, how long do we have to do it, and so forth. So again, if you can't afford $50,000 to get a lawyer to draft it for you, what I would recommend is you book a 1-hour consultation with a lawyer and say, this is the dynamics of our relationship, what are some things that you would recommend? Then you plug that into ChatGPT and you get at least a very default. I don't recommend it, it makes a lot of mistakes, but it's better to have something than have nothing. So that's partnerships. With respect to hiring and firing, right? So like during the recession, we get a lot of companies that come to us and they unfortunately need to lay off a lot of people. We also get a lot of companies that are uprising and they need to hire 50 people at the same time. The worst thing that you can do, again, and this is phenomenal, I didn't think that we have to deal with this anymore, but over 50% of the employers who come to me who are in trouble say they actually don't have an employment contract. Blows my mind that you will hire somebody, but you wouldn't have a contract of hiring. So why do you need a contract? Is not just for clarity, it's because if something happens with somebody's employment, you carry so much risk due to the simple fact that you can be faced with 2 different types of laws applying to you. So I'm going to explain in a moment. An example of this is, you hire an employee, you've had them for a year. Under one legislation, you may only have to give them 1 week of notice. So if they worked for you for a year and you gave them $10,000 a month, you may walk away with paying them $2,500 and they can never sue you. If you don't have that in writing, you could be subject to what we call common law, where under common law, you may have to pay them $40,000, 4 times the 1 year. And if you don't have something in writing saying, I'm going to go with this legislation, guess what applies? Common law. So if you don't have anything in writing, you by default are attracting the worst law that could apply to you as an employer. So even if you have a contract and you say ESA, which is the Employment Standards Act, applies to this legislation, to this agreement, you have already saved yourself fortunes, especially during a time when you may have to do layoffs, right? So the hiring process can, and the techniques that you follow can protect you against the firing process. If you don't have the hiring process set up, the firing process is really going to get you. And you can get sued like through 3 or 4 different channels. You can be sued through ESA, Human Rights Tribunal, the courts, workers' compensation. I know I'm the carrier of bad news, but there's one thing that you please remember is, if you're going to hire somebody, invest the money, it could be a few $100s, in a lawyer to give you a template of a proper hiring agreement, which in turn is probably going to save you tens of thousands, if not hundreds of thousands of dollars. So there you go. Is that 5 minutes? Or you guys have a lot of bad news? I have a lot of bad news. But I think that's enough.
I love your examples. And when you mentioned partnerships, and when you were asking about who was in a partnership, some people had raised their hands. I can see them sweating as you talk. And so I think that's why we left you for last, Hassan, because you specialize in psychology, and I can sense all the business owners getting mildly stressed out as we move down the line. So if you're a business owner and you've heard this talk and you're feeling kind of stressed out, or you're feeling burnt out, what are some of the things you can do to make yourself feel normal again?
I know. So I would say I want to follow Lena with the same question, because she was in law and she asked how would it resonate to the people in the room. I'm in psychology, so I'm going to ask this question. Raise your hand if you're a human. So half of this room are not human. But yeah,
AI.
Yeah, it's AI. They're clone here. But yeah, so I'm going to talk about the psychological aspect of uncertainty, because actually, I think one of the things that business owners underestimate is that how exhausting and draining it is to deal with things outside your control. And I want to share 5 tips. So the first one is that focus on things that is inside your control. One of the things that I like to tell to the people who I talk to when they are experiencing all this stress is that if it's out of your hand, let it be outside your mind. You should not think and try to overthink things that you have no control over. And you have to ask yourself, what can I actually do right now that can help me take a baby step forward to solving my goals, right? So for example, you may have a legal situation that you don't know how to fix. As Lina mentioned, you ask ChatGPT, it gives you an answer, but you can't still trust it. So you book a 1-hour session with a lawyer, says, hey, this is what ChatGPT told me, make sense out of it, or fix it for me, or finalize it for me, right? So you get the best of both worlds. You went from you not knowing anything in law to having something written, and a lawyer in 1 hour or a few hours can help and fix and improve things for you. I think another things that I wanted to mention is about some misconceptions when it comes to burnout that we talk about. And one of them is that we think burnout only happens to weak people. So my background is that during the whole pandemic, I worked with physicians and surgeons on their burnout problem. And I think everyone in this room can agree, those are not the weakest people that we have out there. So I think one of the sentences we use to describe that is that you can't get burnout if you've never been on fire. So all of you are here, you've been working very hard, showing up every day, and this is the last day of this week event, so I know all of you are a bit tired with that, and a lot of socializing and networking, especially maybe for the introverts in the room. Extroverts are probably very happy and looking forward to the next closing reception too. But I think reminding ourselves that this is not a sign of weakness, and it actually happens to the best of us, literally. And when you're experiencing that, I think having that validation and talking with your colleagues that you may, one thing we usually do when we work with physicians and surgeons is that we are reminding them all the people in their unit are experiencing the same thing. And then they form something, then the pandemic they called it battle buddies, which means they're looking at pandemic as a battle that they're all sharing, and they're all in the trenches, they're all together, and that peer support and that connection they had with each other was the thing that was moving the needle the most based on what we found. And for my third point, I'm gonna look at my phone because I'm not that smart to remember everything. And talking about another misconception, I think one of the things, and I taught organizational behavior in business school, so I'm very familiar with how managers and entrepreneurs think about things when it comes to it, right? And they all talk about time management skills. And they think if they have good time management, they're not gonna get burnout. And I wanna tell you here, after working with a lot of high performance, both in healthcare, legal aspect, everywhere, the key to not getting burnout is energy management, not time management. And the way it works is that all of the high performers I see, they are amazing at knowing what recharges their energy, and they're amazing at knowing how to manage a bad day. Because guess what? They have a lot of bad days. And that's how, they plan this before they get to that bad day. So there's a concept we talk about called personal recharging plan, which technically is a fancy name for something to say, you know what can boost your mood before you need it, right? And you come up with some things, and I can share what was my mood booster when I was in Nova Scotia and studying the PhD and all the exams and everything. There was a coffee shop close to me, and they had a croissant that had a pistachio fill in it. And it was very good. I know it was in Nova Scotia, so I can't say go and try it out to believe me, so just trust me on my words. But I would go there whenever I was about to cry. I wasn't crying because I'm a man, but I was about to cry. I would go to that coffee shop because of the stress, and I would get a lavender latte and a croissant with pistachio. It was before this pandemic economy, so the whole thing was $12. I know it's probably right now would be 21, but that was my happy moment. And I would go to the coffee shop thinking it's the end of the world. I would leave there thinking I still have hope, and things are good, and things can be sweet. And I think what I would like to encourage all of you to think about is to find what is your croissant and latte, and find something easy to do, find something that you don't need other people to come with you. And it's something really you can do anytime, anywhere, and rely on it when things are not going as you plan them to go. So I think that's something.
Amazing. I do feel mildly less stressed out now. Now I know I gave all of you questions and we planned what to share, but do you guys have any closing comments or tips for the audience that I didn't bring up or you haven't shared yet?
I guess I would say from, the perspective of raising capital and investments, just because that's kind of my realm of, expertise, think big, when you're pitching to investors, especially, with the Web Summit coming to Vancouver, everybody's kind of brushing up their pitches and getting ready to, be prepared to pitch their businesses to these investors that are coming in from all over the place. Remember that you're not just competing against other businesses locally or from within Canada. These investors, especially the ones that are flying in from the US and outside of the country, they're thinking big. So it's very important to talk about your vision, your strategies, rather than focusing on sort of the technicalities of your technology in your pitch. So that's something that I would say is that have a big picture in mind and think big.
Awesome, thank you so much. What about you, Namir? Do you have any closing comments for our audience?
I would say, there's a lot of uncertainty with cross-border tax. I think the best way to set you up for success as a founder is, revisit the structure. If you already have a structure in place or you're envisioning what a structure would look like for doing business in the US, revisit that as these laws might upend what works now or what worked 5 years ago may not work going forward. I would also say, model out what the outcomes look like. So model out what the outcomes look like if this legislation does pass or if these temporary provisions expire. And I would also say, look at where the value is being generated in your business. So if you have, intellectual property, model that out against your supply chain so that there's alignment. And, when you have those kind of 3 strategies in mind, I think that not only sets you up for success, but allows you to be, audit ready, due diligence ready, M&A ready, and it allows you to also plan for your cash management as a business that wants to scale. And this, applies again whether you're looking to go into the business in the U.S. or you're already in the U.S. There's many ways to navigate through this uncertainty with success.
Perfect, thank you so much. What about you, Lena?
I don't have much in the way of legal advice, but I just wanted to say, I started my business as a law firm, so it was like a human-to-human service. We charge per hour. Obviously, I had my hopes and dreams. I was a sole practitioner, so like the rest of you, it was my baby. It was like my little infant that I carried everywhere, and I assigned my worth and my identity, everything to. I gave it everything, and I have 3 children now, but my business was my first child. But then I started, so now the law firm is 60 people and 3 offices and it's rolling, so now I know that I achieved something. But then I got into developing an app and I saw the world of tech and app, and I realized just how much more difficult it is compared to the day-to-day business, because you're in this completely uncertain sphere and you believe in something, but you don't know if other people would. And the level of risk is astronomical. The amount of money involved is astronomical. I started my law firm with a $15,000 loan from my dad. I bought a couple laptops and then just put an ad. But with tech, it's you already the fundraising. I don't know, it's scary stuff. And then the failure in it is a lot more explosive and profound than if you have a small business and a little bit of shop that you just close. So I don't have any tips. I just want to acknowledge the kind of work you are doing, how much it takes, the mental load that it takes, because as a business owner, the business never leaves my mind. I'm exhausted. I wake up in the morning thinking about it. I go to bed thinking about it. I dream about it. I have nightmares about the people who effed me over, and then I wake up and I have dreams, and for some reason none of us seems to want to give up, even though we know we can have it easier. We can just work for somebody and go home and get a good night's sleep. We don't, and I think that's because we believe in the purpose, and there's something beyond the money and the acknowledgement and the popularity of the product. There's something about us that we're given it this much, and I think we need to really pat ourselves in the back no matter what. Thank you.
Hassan, I think you have a new client here.
Yeah.
Do you have any final closing comments?
Yeah.
Oh yeah, sorry.
No worries. Yeah, no, I'm glad you shared that, Lena. Now I know that I'm going to send you my number. Yeah, closing thoughts. So, what I want to say, I want to end with a networking tip, because you're going to have a lot of networking for the rest of today. And the networking tip, which is a psychology in it, is that a lot of times when we network, we are trying to find people who have solution to our problem. One of the things I want you to think about is find other people who have the same problem. it's a lot easier to find a solution together. So if you are thinking about scaling your business, you may talk with people about the solution and of course connect with them. But there's so much value in figuring things out together, exploring options together, try to find solutions together, and that's something that I wanted to leave you all with. And please also, we have our QR code there, so I think you can connect with all of us there as well.
Perfect, thank you so much. My final comment I want to say is I know a lot of the information we shared is fairly general, and your situation might be completely unique. You might be maybe you're not a Canadian citizen and you're like, none of this tax stuff applies to me. Maybe you're a dual citizen, maybe you haven't started your company yet, maybe you're considering an exit. So if you want to find details specific to your situation, feel free to talk to any one of us. I'm sure we're all happy to have an initial consultation, and feel free to connect with us online as well. And with that, thank you everybody. We'll open it up for Q&A, but that's the end of our presentations. Yes.
I have a question for Namir. Thank you for the talk.
Can I give you a mic? I can't
No, it's
hear you.
okay. I can just
You can
raise
be
my
louder or
voice.
you can
Okay. No, I just want to say thank you guys. This has already been really helpful and insightful. For Namir, I'm just curious to know, you said that obviously this isn't really hot off the press, just as of 2 days ago. How long does it take for that to go to Senate for it to be finalized?
That's a good question. So the Republicans have a slim majority in the House, which meant that when this got passed in the House, there's 2 chambers of Congress, there's the House and the Senate. So when it got passed in the House, it meant that they needed to have very little dissent, voices of dissent, to be able to get that through. Now the Senate is different. The Senate has 100 seats, and you need to be able to have a majority to overcome what's known as a filibuster. So filibuster just means, and this has been used a lot in the last 10 years, filibuster is a tactic used to slow down or maybe completely block legislation. There's not enough Republicans to be able to overcome the filibuster. So what that means is for it to pass through the Senate, the second chamber of Congress, they're going to go through what's known as a budget reconciliation process. And this is a very narrow way to pass legislation because you don't have the majority. And the way that works is you have to show that within a window of 10 years, and this can only apply for things that relate to revenue, debt, budgetary items, like you can't do things that are unrelated to that. So very, very specific, narrow focus. Whatever you legislate in that reconciliation process has to be balanced over 10 years. So in 2017, when Trump's first administration, he passed a similar budget reconciliation process. And those provisions, and that's why we're seeing the expiration of them, they're already starting to expire within that 10-year window. So he has to find a way to be able to, or the administration has to find a way to essentially finance multi-trillion dollars of American tax cuts. And so the ways you're going to do that is revenue raisers on different items, like there's a lot of rollback of energy and clean energy initiatives. There's also tariffs. There's other measures to be able to make these tax cuts work. But the big beautiful bill that's going through the Senate, and they're trying to get this through by July 4th. I don't know if it'll get through by July 4th, but I do think this is going to get passed this year, and I do think it's probably going to be passed, probably not July 4th, but because that's when Congress resumes, but it's probably going to be by the fall this year. And the tax provisions that are in there that will impact Americans as well as Canadians, those will be enacted for January 1st, 2026. So this is a bit better than 2017. When 2017 happened, the legislation was passed during the week of Christmas and the holidays, so kept us tax accountants really happy. But yeah, I do think it's going to pass. The real big question for Americans right now is how many of those provisions in that big beautiful bill will remain intact by the time the Senate reviews it. And they're a little bit more conservative. They'll probably scrutinize it more.
Okay. So July 4th is the
First kind of tentative date, if they can get it through. Even with this bill that went through the House on Monday, if you were watching the news, the Republicans were saying there's no way this is going to go through as is, but it did. So, we'll see. Again, I think the Senate's going to be a harder one to get this through, because once it goes through Senate, then Trump has to sign it.
Right.
But he's pushing for July 4th.
Yeah.
I suspect fall will be more likely date, but.
Thank you.
It's not a long timeline.
No,
And I just want to throw this out there. I know we're talking about U.S. companies, Canadian companies and startups. But if you're an individual and you're invested in U.S. securities that pay U.S. dividends or any sort of U.S. income, that affects you as well. So definitely talk to somebody and figure out what that looks like. Yeah, question over there.
Do you want
Oh, do you want the mic? Okay. I'm getting my steps in.
Awesome, thank you. First of all, thank you very much, everyone. I think this was one of the best events, if not the best event. I think that part of it is the expertise of the panelists, but also the genuineness and the lack of salesiness, which is really good. I really appreciate this. So thank you very much. Christine, in the beginning you mentioned that there's been a shift in investors in terms of what they're investing in and the stage of the company that they're investing in. Does that reflect the risk acceptance and tolerance level of the investors in this current climate, where they're looking at bigger, more established companies with a lot of the things figured out and lower returns, but lower volatility?
I think it definitely does reflect the risk sentiment on the investors' part, and that's nothing new. That's something that they're always looking at when it comes to making investment decisions. But just given the current landscape and uncertainties around, the potential supply chain disruptions, the economic tensions between, perhaps for companies that are in the business of importing, exporting, actual goods across the border, those companies are obviously, in the eyes of the investors, are going to be considered higher risk than companies that are more in the industry of providing services online, et cetera, right? So from that perspective, definitely I think, if we look at some of the investments that actually did take place in the last quarter, the focus was on later stage companies that have a little bit more of self-sufficiency in their cash flow, as well as, industry-wise, like again, software-based infotech. These are the kind of companies that are drawing a lot more attention. So, the fact that they're paying attention to the risk factors is nothing new, but just kind of given today's kind of environment, I think it definitely impacts the sort of the trend that we're seeing.
Yeah, I can agree with that as well. Last year I had clients asking me, hey Darius, I have like 20% of my portfolio I want to allocate to private investments or startups. Who do you know? Who can you introduce me to? And this year when I'm following up on those conversations, most of that has died away, or they're very cautious. And we're even unwinding some other positions they took before. So I think overall everyone is more risk averse than they used to be. I think we have time for one last question. Yes.
Hi, this question is for Lena.
We can hear you, no worries.
Thank you. Thank you for wonderful advice. So my question to you is, partnerships are inevitable. Mm-hmm. You have to get into one to really find cover for your weaknesses and to exponentially help you with your strengths to get into the realm of it. So the question for you is, how do you propose a partnership from the get-go? Mm-hmm. Do you start the? You don't want to sound gloomy in the starting. You want to be all enthusiastic about the venture. Yeah. You don't want to say, okay, let's. If you want to exit, that's not how you start. Yeah. Right. So it's like, okay, we're gonna get married, but what about the divorce? It's like that. So how do you propose we approach that problem?
I think what I usually tell my clients is, immediately after you buy a car, what do they require you to do? Insurance. In case you get into an accident. You never want to get into an accident. It's a beautiful car. You want to take it for a ride and live with it happily ever after. But you're still gonna, before you can even take it out, they say take out insurance. So if you're getting, your car might be maximum, I don't know, like $50,000, $100,000. You
just compared spouse to a car.
It's a partnership. It's more than a car. A car is a purchase. This is a partnership. Fortunes are involved. Millions are involved. Kids are, again, not family law, but with business. It would be so unwise to try to avoid the conversation when the conversation has more than a 50% chance of happening at some point. And you want to address the conversation when you're on good terms, not when you're on bad terms, right? But what I would say is, me and my husband, have a prenup. It was very tense. We're getting married and we're talking about, it was very awkward, trust me. But it was mostly about not what I want to keep out of this. It's like I want clarity. I want to make sure that if something happens, we don't waste our time and we don't fight over our kids and we have some clarity as to the path forward. But if somebody accepts partners and you're just getting into a partnership, I think what's really important, and this is something I've learned even through my own business and my partners, is you start very slow, right? Like you can start from separating most of the stuff and only really being partners on the major stuff. For example, you can say, I'll cover 50% of the expenses, you cover the other 50%. I'll make these decisions, you make these decisions, and you pick only very few decisions that have to be made together. So that you kind of like have this exercise of how are we doing, and you have a delegation of decision making, so that if he or she makes a decision, you know that you signed up for it. Like you can't blame them for it. So you just start very carefully and step by step. And once that trust is established and you're going through it more, then you can share all the profits, share all the expenses, make all the decisions together. But I've seen so many bad and sad situations arising from avoiding that conversation that I just think people who would want to do it just wouldn't be a wise thing to do. You just have to deal with it, kind of like
I understand.
Yeah.
So from the get-go, what do? You sign an agreement. You get to a lawyer, get everything chalked out first, and thank you. That pretty much
You can
answers.
start very simple with a lawyer and say, I take X amount, you pay these, we make these decisions, and we will review this agreement in a year. You can start very simple. You don't have to go and pay $50,000.
And let the lawyer say the terms, so that it's both of the parties,
Yeah.
all the parties involved.
Yeah,
They know
and then you
what
can
they
review it
expect.
and make it more complicated and pay more money for the agreement through legal fees, which sometimes is definitely worth it. But at the beginning, I wouldn't spend too much money. I would just cover my bases.
I actually can add something in the.
Oh, nice. I was going to say, you're going to compare them to a car. Just tell them they're a nice car, like an expensive one, like a Lamborghini, not a Toyota Camry.
Yeah, and just one sentence to add in terms of the psychology of it is that if you don't want, because at the beginning we all want to be source of positivity, and and projecting that we think everything's going to go well, you can go talk to one of the lawyers at Y Law, and then tell them, hey, I have this is she didn't pay me for this, I'm just doing it naturally. But you can go and talk to them and says, hey, I have my business partner, I heard that I have to do this, but I don't want to be the person, so I'm going to go there and say you suggested it and it's your idea, not my idea. And lawyers are very used to this, right? So you just go there and you're like, and then you tell your partner, I think 100%, I have zero doubt, this lawyer doesn't let me. They are saying we must have this, and they say this is the process. So then you save the face, your partner is going to think that you're so positive and you believe in it, but you still have the essentials in place.
Legal obligation.
Yes.
Perfect. Thank you, everyone. I think we're going to end it there. Thank you so much. And please eat the food. If nobody eats it, we have to take it home, and it'll go to waste. So.